Imagine waking up one day to find that everything you export to your biggest customer now costs 145% more. That's exactly what happened to Chinese manufacturers this spring when the US-China trade war spiraled completely out of control. And the latest export numbers from China? They're telling us a story that nobody saw coming. China just dropped their May trade data, and the numbers are screaming one thing: the trade war is biting hard. Exports only grew 4.8% compared to last year, missing what economists expected. But here's where it gets really interesting. While everyone's focused on that headline number, the real story is hiding in the details. Chinese exports to America absolutely crashed, dropping 34.4% in May. That's the sharpest monthly drop in over 5 years. Think about that for a second. More than a third of China's exports to the U.S. just vanished in a single month. But wait, there's a twist. While U.S.-bound shipments are falling off a cliff, China's exports to Southeast Asia surged almost 15%. Exports to Europe up 12%. What we're watching is nothing less than a complete rewiring of global trade happening in real time. China's basically ghosting America and sliding into everyone else's DMs. Let me take you back to how we got here, because this story is absolutely wild. When Trump returned to office in January, he came out swinging. February 1st, boom, 10% blanket tariff on all Chinese imports. His reason? The fentanyl crisis. Then things got crazy fast. By March, he doubled it to 20%. China hit back with their own tariffs on American chicken, wheat, and soybeans. Then came April 2nd, what Trump called Liberation Day. I'm not making this up. He slapped a 34% reciprocal tariff on Chinese goods, claiming China had unfair trade barriers. The next week was like watching two kids in a schoolyard trying to one-up each other. Trump raised to 104%. China matched with 84%. Trump went to 145%. China shot back with 125%. At this point, even China said enough is enough. Their finance ministry literally called further increases a joke in the history of world economy. Can you imagine? Government officials basically subtweeting the U.S. president. Now here's what makes May's data so fascinating. These numbers came out right after both countries agreed to a temporary ceasefire on May 12th. They slashed tariffs for 90 days. U.S. tariffs dropped from 145% to 30%, while China's went from 125% to 10%. Markets went absolutely nuts. The Nasdaq jumped over 4% in a single day. But look closer at what's really happening. China's trade surplus actually widened to $103 billion in May, up from $96 billion in April. How? Because while exports disappointed, imports completely collapsed, down 3.4% when economists only expected a 0.9% drop. This tells us something crucial. China's domestic economy is struggling. People aren't buying stuff. Businesses aren't investing. The property market? It's in free fall. Investment in real estate dropped over 10% last year, the worst decline since they started keeping records in 1987. Consumer prices are actually falling. Producer prices dropped 3.3% in May, their steepest decline in almost 2 years. When prices fall like that, it means nobody's buying, and factories are desperate to move inventory. Here's the kicker, though. Remember those surging exports to Southeast Asia and Europe? Some of that is real diversification, but a lot of it, it's what trade experts call triangulation. Chinese goods get shipped to Vietnam or Mexico, get a new label slapped on them, then mysteriously find their way to American stores. It's like trade laundering, and everyone knows it's happening. The real question is what happens when this 90-day truce expires in early July. Treasury Secretary Bessent keeps saying they want China to buy more American goods, just like the failed trade deal from Trump's first term. Remember that one? China promised to buy $200 billion worth of extra American stuff. Guess how much they actually bought? Zero. Zilch. Nada. Meanwhile, analysts are slashing their growth forecasts for China left and right. UBS just cut their 2025 projection from 4% to 3.4%. ANZ dropped theirs to 4.2%. Some think the real growth might be even lower, maybe just 2.8%, way below what China's claiming. And it's not just about GDP numbers. This trade war is literally reshaping how the world does business. Ports on the East Coast are preparing for a permanent shift away from China. The Port of Virginia CEO said it straight up. The future is less China, more Southeast Asia and Europe. Supply chains that took decades to build are being ripped apart in months. The human cost? Chinese factory workers are losing jobs as export orders dry up. American consumers are seeing prices rise as tariffs make everything more expensive. Small businesses on both sides are getting crushed by the uncertainty. Nobody can plan when the rules might change with a tweet. What's really mind-blowing is how fast this all happened. In 2018, during the first Trump trade war, it took 18 months of negotiations to reach a deal. This time, the tariffs went from 0 to 145% in just 9 weeks, then dropped to 30% almost overnight. It's giving everyone whiplash. The scariest part? We might just be seeing the opening moves. Trump has threatened 60% permanent tariffs on all Chinese goods. China is sitting on a massive pile of rare earth minerals that America desperately needs for everything from phones to fighter jets. They've already started restricting exports, and the value of rare earth shipments to the U.S. nearly halved in May. Some economists think this could trigger a global recession. The OECD just cut their growth forecast for the entire world economy, blaming the trade war. They're particularly worried about the U.S., projecting growth of just 1.6% this year. That's recession territory, folks. But here's what nobody's talking about. While everyone's focused on the big macro numbers, China's been quietly dominating in emerging technologies. They're killing it in electric vehicles, solar panels, and batteries. A Chinese AI company called DeepSeek just shocked Silicon Valley with their latest model. The old economy might be struggling, but the new economy, that's a different story. So what does this mean for you? If you're American, get ready for higher prices on pretty much everything. That cheap stuff from China, not so cheap anymore. If you're in manufacturing, you better have a backup plan because your supply chains might disappear overnight. If you're an investor, buckle up because this volatility isn't going away. The May trade data is just one snapshot of a much bigger picture. We're watching the decoupling of the world's two largest economies in real time. It's messy, it's expensive, and it's probably going to get worse before it gets better. The next big date to watch? Early July, when the current tariff truce expires. Will they expend it? Will Trump follow through on his threats? Will China retaliate with something bigger than tariffs? Your guess is as good as mine. What do you think happens next? Are we heading for a full-blown trade war, or will cooler heads prevail? Drop your predictions in the comments below. Like and subscribe if you enjoyed the video.